Alright, good evening everyone. It's me, Kelvin from Round Search. So today we'll be going through our stock trading coaching session. And let me do a little bit of a small introduction of what is this session is about. Basically, coaching session, so it's like coaching you how to look into stock market and stuff like that. And of course, if let's say you have any questions you'd like to ask, you can always drop it in the comment section. Okay, so of course I'll be sharing a bit of right now how is the market and how you should actually trade in the current market right now, and what are the stocks that you have. I wouldn't talk about the stocks, okay? What are the trading methods that you have to be careful of, and what are the tools that you want to look into? And of course, if let's say there are any of the financial instrument, if let's say you are not sure how is it able to actually help you for investment, or you want to know more about it, such as like structure warrant, how does the theoretical opening price actually work, and during the matching time, and of course any other things, or any analysis that or indicators you want to know about, you can also ask me. Although I don't use the indicators, but I did use before last time. Right now I don't really use it anymore. The reason is because it's not really workable in the current market, in this financial mad world. Okay, because the current market is more on based on the expectation of the big boys, the people in the market, the institutional investors, what is the expectation, and you can come up with a lot of stories for them to actually boost the stock price to move up higher, or to increase the valuation of the stocks. That's why you can see a lot of tech stocks are able to do that right now. But because the market right now, as we know, is a bit quiet, but we expect this to be like moving sideways for some time, which I already shared during last week, the Sunday pre-market prep. I already shared to you guys the market is going to be, although it's really good last week, and then start to move a bit more sideways and having some retrace coming into the market. So you have to be very careful, but it doesn't mean that there's no stocks for us to trade. There are also stocks for us to trade, just that you need to know how and what are the stocks and the best timing to actually look into it. Okay, so before we start this session, I hope that every one of you can give us a like if let's say you like this session, and also share this out to your friends, and remember to subscribe to our YouTube channel. And if you like to look into some of the blog that we post, then you can go to our Facebook page and our website roundandsearch.com to sign up an account, so you can actually read the blogs from there as well. Okay, so yeah, today what I'm going to share with you guys is that what is the current market is like. I think a lot of people in the market, you are quite start to have a little bit more optimistic right now. We can see more retail investors are coming into the market. So if we look into the top active stocks, okay, a lot of stocks are moving up, but we have to be a bit careful on that, because some of it they are not they're more like reaching to the peak, so you have to be careful of it. Okay, so you just need to know the market, the right trading method and right analysis to look into it, because the current, basically the market, you have a lot of choices, options for you to trade, a lot of stocks for you to trade, just that you whether you need to know how. Even though when the market is down, like what we did previously, you can see from April time up until July, you can see that April, a lot of people is still skeptical about entering the market, and the market is actually at the peak. You can see this graph over here behind is actually the KLCI, SCAP, and also FBM ACE market. So you can see that April wise, we are still able to make some profit from it. The majority of it, you can see, are all the small profit that we make, 400, 200, 100. So all these are done by short-term trading, and also for the day trading, and only one, okay, which is 2200, that is about that is a bit longer term. It's still considered short term. It's not much of a mid term, so holding period about like 1 or 2 weeks like that, if I'm not mistaken. So 5,000 plus of the profit. And on May, the market is basically going down, but we are still able to make profit from it. So either you can see we have a lesser trades in the market, because not much of trading opportunity, but we need to know which one to actually look into it, and know when to move in. It's not about the best price, it's about the best timing to look into it and exit at the best timing. So here wise, only 4,000, slightly lower than previous, but in the down market is actually considered pretty good. And come to June time is a very bad market, so we did lesser trade as well. So on, you can see from here, starting from 20th of May until 1st of June, we don't really do look into the market much, but 1st of June we come back into the market and look into it to test it out. So we still do a lot of cut loss from there, but the losses are very minimal, so we can able to limit the losses at about 1,006. So this can actually help us to protect our profit before. So this is very important, because in the stock market it's not all about hitting the home run and then pushing the price, waiting for the price to move out 100% or 200%. So all this small profit from here, we can actually make quite a good profit in the market. So then July time is where the profit actually comes back in, so we get about like 3,000 plus of the profit. You can see majority of the stocks that we look into it is actually at a profit. So you will notice that the stocks that we are looking at from Round and Search is a lot of it are actually at the positive. So cut loss wise is not that much. And then here, I don't know how many trades that we have here, but what I can see here is that 1, 2, 3 stocks that is only cut loss. And then only June time, when the market is really bad, then the big boys are more towards to attract more buyers when there are signals coming in, so we can limit the losses from there. And then from here, July wise, we only have one cut loss, and plus one today, we have another one cut loss today. So we are able to have this July profit at this point here. So you can see that the from here, we can see that the total profit out of 4 months is about like 11 over 1,000. So each month about like probably 3,000, close to 3,000, 2,000 plus 3,000. So that's why it is important for you to know how and when to apply the right trading method. So like I say, I always look into be a versatile trader. So you can when the you will trade based on the market, how to look into it, when to apply the day trading, when to apply the short-term trading, when to apply the mid-term trading, okay, and also when to enter for longer term trading. So this is very important. It's not just you learn about technical analysis, then everything is going to work, because I don't like to look into traditional technical analysis, because those doesn't tell me like when to apply this, because most of the time when that happens, when you break the support, the price has already gone down low. So if I were to use the break the support, so all this result over here will not be positive, then it will be a negative from here. So that's why we need to know that pretty fast. So what I see from here is that the traditional analysis is more for to identify what is happening right now, but instead of telling us what is going to happen. So if let's say we want to know what is going to happen into the market, then we need to know what is the big boys intention. So big boys intention, we separate it into a few ways, okay. So big boys, how their operation is always like they accumulate the stocks, they mark up the price, and then they mark up the price while they're distributing. So from there, we know that whether they have the intention to move the price up higher, looking at the price and volume itself. So up until a point that when they have distributed majority of their shares, then they start to throw the price down. They start to maintain the price at the higher point. And then they do a lot of price push up and then throw down on the same day, price push up on the same day, and throw down on the same day. So that's why when you see a lot of upper shadows when the price is at the top and then there's not much of price retrace, it's basically telling us that the big boys have not much intention to continue to push the price up higher, because they have already moved to a point that they are reaching to the peak of the price. Okay, the peak of the price means like their shares in hand is lesser right now. So basically they have not much shares in hand, so anytime they can throw the price down lower. All right, so I can show you there's a lot of stocks. Malaysian market, you have a lot of these kind of stocks are moving, since very long time ago, even up until now also. You can see that the stock price, KPSCB should be somewhere here, that they have the moving house. We call it moving house accumulation. Okay, and some of the people, they call it warehousing. So this is where they accumulate their shares. This is a fast push up, so you can see from about like 50 over cents up to about like 86 over cents over here. So this is one of it. So if you want to look into this kind of stocks, then you have to know, you have no way to use technical analysis to identify their accumulation and know when are they going to push the price up higher, because technical analysis, the entry signal is always based on resistance breakout with high volume. Anything that doesn't have a high volume previously, you will not look into it, because if you fear, you will not enter into it. Okay, other than that, you have like the most recent years is these stocks over here. So you can see same thing, they have done the accumulation and then price are being pushed up from 15 over cents up to about like 40 over cents within. This is more like to the midterm. So you can see while they are pushing the price up higher, you will find that the price, there's a lot of retrace over here. So a lot of people always think that this retrace is because there are resistance here. Yes, there are resistance, but this resistance, people tends to put this resistance and then it turns into support. That's what a lot of people will always like to do. So they will, oops, I'm not sharing my chart over here, sorry. Okay, so this is like stocks over HB Globe, okay, 16 over cents, and previously they moved up to June, about 30 over cents over here. And then you can see there's a lot of price retrace over here, like I mentioned. So what people would tend to do is that they will put one resistance line at this point, and then they say like, oh, this is the resistance, there's a lot of selling pressure from here. If it break this level, so means that they will continue to move up higher. Generally on the surface it's right, okay, but when they say like this actually turns into a support, when you know how the big boys are marking up the price and stuff like that, then you will not think this is a resistance. This resistance will turn into a support, because why? Big boys will accumulate their shares and then push on the way up, mark up, distribute on the way up. So once they push up the price, they are retail investor, they come in. So retail investor always park at a lower price. So what they do is they throw it down to them. So that's why it calls a retrace. So every retrace over here is actually telling us that the big boys have lesser shares in hand. So we know that the big boys will mark up the price. So if let's say there are lesser shares in hand right now, until a certain point, the price will just fall because they have not much shares in hand. Let's say they left maybe 5% of shares in hand, maybe 2% of shares in hand. There's no point for them to continue to push the price up higher and then spend more money to, let's say you need 5 million ringgit to actually distribute 2 million ringgit of shares. So it doesn't make sense, right? So they can just throw the price down lower, right? Because the profit they have already made on the way up. So that's why when the price is going down at this point over here, you can't use this as a support, because this is the point where the big boys are taking profit. So same goes to all this over here. They are taking profit, and then up until a point, at this point over here is showing us that the big boys, they have not much of shares in hand. So that's why they don't have to do too many of the retrace. Why? Because usually what they'll do is they will distribute majority of the shares on the way up. So let's say up until this point over here, the big boys have already distributed 80% of their shares below this black color line over here. So the remaining shares, maybe 80%, maybe 90%. So it depends. So that's why each time when they have the retrace, they need to distribute more shares. Let's say 1 million of shares, let's say 80% of it, they have done 1, 2, 3, 4, 5, and then 6 over here. So 6 times of distribution. So 6 times of distribution, 8 million shares is about 1.5, 1.3, 1.3, 1.2, around 12,000, 120,000 each. So 120,000, 120,000, 120,000. But when it comes to at 20% over here, let's say they left about to this is how much I say 1 million shares, 800,000 is actually distributed here, and then here left about 200,000 of shares. So left 200,000 of shares if they need to distribute every day. So from here, let's say about 14 days. So 14 days, 200,000, one day is about like 10 over 1,000 plus. So it's not up to 100 over 1,000. So that's why they don't have to create such a high retrace in the market. So that's why when it hit to this, when the price there's not much retrace, then we know that the big boys have not much intention to push the price up high because they have lesser shares in hand. So lesser shares, so that's why they throw the price down. So you can see right now the price is actually trading at 13.5 cents, so which is below that. So once they get out, they usually don't reaccumulate at the higher point. The reason is because why they need to reaccumulate at the higher point when they can actually press the price down lower and accumulate at the lower price, right? So doesn't make sense. So that's why they will not reaccumulate at the high side. So they will just wait for the price to come down first, then reaccumulate, and then they push up higher. But it would not be immediately. So usually after one stocks they move up like this, then it waits for maybe a few years later, then only the price they do another operation to move the price up higher. Because it's not like saying like you want to push the price up higher, then you can, right? So it's like selling a product. If you have a product, you don't have any marketing material or any good things about your product, you can't sell. So this is the thing over here. So they need to wait for some of the good news projects, okay, or maybe injection of the stocks, okay. All these things have to be done. So this will happen when this will usually happen. These kind of stocks like accumulate and then price peak over here, push up the price. It will happen when during the market recovery you see a lot of stocks are coming into accumulation. So right now is the best time to look for it, but right now we don't have it. But doesn't mean that we stop our trades, we can't look into it. So we see a lot of stocks are actually going down like this, okay. So right now have a bit of price pushing up. So I have a question here: swing or day trade? Swing trade, if let's say, okay, put it this way, swing trade for myself is below 1 year. Okay, the holding period is below 1 year. I hope you are still here. SF. So it's below 1 year. So I'm not doing at the moment. Since April time, we don't do much of the swing trade much. Okay, but the swing trade, I already show it to you how they do the swinging. And day trade, I think you are referring to what I show you just now for all this profit over here. We have short-term trade, we have day trade as well. So all these 100, 200 over here are mainly day trading. So you will see some 400 plus and then 600. Some of it is the short-term trade. So short-term trade, what I mean is like below 1 month, holding period below 1 month. I'm not holding more than that. So it's the mix of it. How we can generate into this is not depending on whether to one swing trade or maybe to one day trade or maybe to short-term trade. But please don't mistake that as the short-term or day trade is whichever is actually better than the others. So there's no best day trade, or maybe you can't say short-term trade, swing trade is better than long-term, long-term is better than short-term. I don't agree with that. Although a lot of people out there, they have been, this two kind of school of thought has been fighting to it. For what I think is that both of all this is just a method for us to trade in the stock market. So that's why, if let's say every one of us, we want to make profit, right? So if short term we can make profit, why not? Intraday we can make profit, why not? Swing trade we can make profit, why not? If long term we can also make profit, why not? But most importantly, all of this, we are looking into just one thing, which is the capital gain. Right? So if you are going into long term and then saying that you are a dividend investor, you don't care about the capital gain, no such thing. Because imagine a stock price can actually goes down like 50% or 30%. How many years of dividend would you collect? Will you need to collect to actually get back that 50% or maybe 30% losses in your capital? So if let's say you put it in that way, why not you put it into FD? Is much more easier, right? Okay, you still have your funds with you. You still can push. I mean, you still have your interest, gaining your interest. But of course, the interest is actually pretty bad, not as good as stock market. But stock market, yes, you can make profit, but you need to know how. Like I say, you need to follow, because stock market is not is more like I say, like the big boys are going into it, so you can't just use things that is everyone reading the same textbook and then you can make from the stock market. You need to know how these people works. So when you know how this mechanism actually works, how this or what is the operation, you can do short term, you can do day trade, you can do whatever you want. You can hold up long, hold short, hold minutes. You can also do so. You can also look into some of our intraday trades. Okay, I've shared. We have posted in our YouTube channel. So like seeing like how many very few seconds we can make profit from it. Even though intraday trade also we have a few methods, like the pre-open market. Before the market open, we need to select the stocks, and then when the market opens, okay, let's say for example right now, if lot previous few weeks back, most of stocks are at the bottom, so we need to learn how to actually look into it and look for those rebound stocks. They are going to have a rebound, and then we catch this, either we catch this during the day, or maybe we catch it for 2 days over here, 2 days price up. Okay, so other than that, we also look into some of the stock that keep on churning that you can actually do intraday trade. So it doesn't matter whether you want to go for day trade or swing or short term. So most importantly is you need to know how to find the right stock, and of course not just about what stocks to trade. And also another important thing is that you need to know when the best timing to look into it. Okay, so like for example right now, most of stocks are moving up higher, so some of stock they will continue to move up higher, so we need to look into it and find out which one actually will continue to move the price up higher. But I'm going to share with you some of the examples that because right now I'm not going to tell you like what is already happened, so I'm going to tell you like what is going to come, which is like there might be a retrace coming, so we need to spot where is the bottom from here. So the examples over here I'm sharing it to you that have already gone through and the price has already moved up higher. So it's just an example, so for you to prepare for the next timing. So for example, for these stocks over here on 14, we time our entry over here. So a lot of people, if you're using the traditional technical analysis, then you will not be able to find the entry at this point, because you will not dare to enter here. The reason is because you find that at this low point, is it confident? You're not confident to move in. Sure, that is going to rebound. If you follow technical analysis, then the traditional one, then you might enter at this point over here. Then your losses, your profit will actually decrease a lot, because you are going in late, you wait for the confirmation. So yes, sometimes we do wait for the confirmation, but for this kind of rebound, spotting the rebound stocks, the confirmation, what we always look into it is we look into the 5-minute charts to know what is the price of it. As we know, when the price is going down, usually this is the point where there's a lot of selling pressure. So we need to identify when is the price is going to have a rebound over here, is that we need to know when is the price that is going to have lesser selling pressure and more demand are coming in to support the price. So I don't draw support line. The reason is because I already told you guys just now. So if you just join in, then you can actually play it back, replay it back, and see why I don't look into it. The explanation of Big Boy's operation. Okay, the support is not really the support. So we need to find the true support. So how do we know the true support is? We need to look into 5-minute charts. If you are looking at usually traditional technical analysis, then when you look into it, you just look into a daily chart. You won't look into the 5-minute charts. 5-minute charts, people look into 5-minute charts because they want to trade like during intraday. But during the day, how the price move, how the volume actually comes in, when are they coming in, and how does it affect the price is very important for us to know that, to tell us, is this a support? Okay, like for example over here, when this stocks, when it's going down on 12th of July, so we can see when the price is going down, there's a lot of high volume over here. So when there's a lot of high volume over here, this actually indicating the selling pressure is still strong. So on that day itself, it has strong selling pressure. Even though after that they move sideways at here, but the even though there's a high volume and then the price is still moving sideways, the price don't really goes down lower. We will not look into it because that day itself the selling pressure is still strong. So people are still selling. So we need to wait until a point that when the price is down, you can see the next day when the price is down, this candlestick over here, it creates a high volume, and so this actually tells us the selling pressure is still strong as well, because on the day itself, the opening price, the price is down with the high volume. But one thing good is that the higher volume is actually created when it reaches to the bottom of the day. So the price are able to push the price up higher. The volume are able to move the price up higher instead of going down. So this is the common sense of price movement, the very basic of understanding a price. I think every one of us, we know when the price is going down with high volume is very bearish, okay? But when there's a high volume but price not moving down any lower after that, so that actually tells us that the price is actually being supported at that point. So after that, you can see the price moving sideways, and then the next day itself, the price still moving sideways, but we don't see any of the prices going down with the high volume. So from here, we know that the high volume is the demand is the selling pressure, at least the selling pressure is gone. So when the selling pressure is gone, so we can see the price are moving sideways, and then there's some high volume actually comes in. That's where we can see the price are moving up higher. So from here about like 2 ringgit 39 cents. So right now like move up to 2 ringgit and 78 cents. Of course, we didn't actually hold up to 2 ringgit and 78 cents. Okay, we roughly, I think we exit somewhere here because we saw that they are not much of it shows some of our exit rules that it shows that they are attracting buyers. So yes, they are consistently moving up the price to attract the buyers to come in. So this is the reason why we exit that. But we can always come back into the market. So we can see the price have a retrace after that. So this is how you can find the stock. So knowing when is the best timing to look into it. Right, so this is one of it is very important. And then also how do we know that the stocks is dangerous for us to look into it, that they will have a price down retrace? Basically, it's very simple. You can see this one is the price is down. Okay, it's something like an L shape. You just shift the L shape over, and then when the price, if you see any stocks in the morning, they push up in the morning and then maintain sideways throughout the whole day, that actually tells us that they are just maintaining the price, attracting buyers. During the whole day, they are trying to create a lot of high volume to let you feel the fear of missing out in the market, so that you will get trapped into it, or you have a fear of missing out, will jump into that stocks. So next day they will throw the price down lower to your buy orders. So that is how you can try to avoid that in the current market. Where if you see something that you really want to move in, and then of course you hear and see some people tell you look into this because of the they have a good financial report is coming, and then their fundamental is like this, and then based on previously what do they say about their stocks, the price is going to move up. The company, they have the project new business coming in that is going to boost the revenue. This thing, all right, about business, whether good or not, they have a new project or not, these are the things that I don't see a very direct correlationship with the price move up. Okay, because ultimately the mechanism of the stock price is actually a separate management with the business. So what actually moves the price up higher, we know that is the demand, because the unit of shares in the market is fixed. It's not unless they have AGM and then decided to issue more shares, then it's not like saying they can issue it anytime. So the share units is fixed. So when there's demand come in, the price will actually start to move up higher. Okay, so far we know that if let's say you have already traded in the stock market or invest in the stock market for a very long time, we know that always when there's a news come out for some of the company, on that day itself, the news come out, the price will move up higher, and then after that, it doesn't move up higher anymore. It goes down lower. So that's why, for myself, I think that I don't really look into read the news. I mean, I read the news, but the news is mainly for my knowledge, okay, to find out more what is happening in the market, okay. So that's why I don't really look at that read news in the market, okay. So this is basically how we find the stocks for the rebound. So to help you better in the next the upcoming trading days. So of course, the upcoming trading days, there are some of the stocks that you can do some short-term trade. But if you find anything that is moving up higher and higher and higher, every day move up higher and higher, then try to avoid that, because that is usually why they do that. They are aggressively attracting buyers. So when they are attracting buyers, then try not to look into that. Okay, so I also share to my students, okay, be careful, so they know which one not to look into it. And then most of them, they are doing a short-term tradings right now. And then of course, today what I've shared to you today is just like how to look into it. The whole thing about trading is not just the knowing when. Of course, up until the end of the day, every aspect is actually very important. Knowing when to enter, and then not to be too greedy. Of course, discipline, one thing is that, but the current market, there's a lot of cut loss strategy that is make us not able to discipline. The reason is because it's too systematic. So it's not based on different stocks to set the cut loss rules and also the exit rules. Like for us, for ourselves, I call it exit rules and cut loss rules, is because I don't set a fixed price. Different stocks will have different price. And then when it comes to exit rules, in certain price and volume criteria, or not criteria, there's a certain price and volume movement that it will trigger our exit rules, that it shows that the big boys have no intention to push up higher. They are going to throw the price down lower. So that's why I put it as a rules. So if let's say you are looking into tradings, and if you're new, not just new, if let's say you already traded in the market for some time, and then you find that you want to improve that, then probably that is the point that you need to improve as well. Okay, so you need to look into risk management and position sizing as well. Of course, you can try to look into it, this kind of way, to spot the rebound. But like I say, this is just the cover of the book. So you need to know more about it, what is happening, what other things that you need to look into it, position sizing, and a lot more. And of course, how do you control emotions? So you can actually control emotions, done that through using risk management, so limiting yourself on the trades. Because most of us, when we enter into the stock market, we usually enter based on the value. Okay, how much value you have, how much funds you have. Then you have like 2,000 for one stocks, you put in 2,000 for one stocks. But sometimes it's because the stocks, 2,000 ringgit to buy 1 ringgit stock and 2,000 ringgit to buy 20-cent stocks, the units is huge, it's different. So that's why you're exposing too much risk into the penny stocks. All right, so when it's at the penny stocks, that actually tells, like, let's say you have 2,000 ringgit and then you buy 20-cent stocks, you are buying about like 200 units. So when 200 lot, so when the price goes down one tick, half cent, 1 cent, then you are losing 200 ringgit. But for 1 ringgit stock, for 2,000 ringgit, you can only buy like maybe 50 lots. Okay, so each tick price up, you are gaining 50 units. So here you're losing 200, here you are making 50, so we are not able to cover it. So that is one of the reasons why a lot of retail investor, in the long run, when they trade or invest in the stock market, they are still not able to achieve a very attractive profit in the stock market. That is the reason. Okay, so we have our own position sizing. So usually what we do is that we use our initial capital, the very starting right now the capital. You don't have to keep on do the calculation, let's say you start with 10,000, usually we multiply by 0.4, then that number is actually our number of units to buy for each of the shares. Okay, so one thing, because if let's say you have lesser funds to start with, so you need to make sure that you need to have low brokerage fees. So you go for cash account, don't go for limit account, or don't go for any like a collateral account or margin account. More this kind of limit or collateral account is more like credit card for you. So when you don't, if let's say right now you see something you want to buy, then you can actually utilize that credit card to actually buy that shares, buy that stocks. But if let's say you're looking into like trading and you have a lesser funds, then go for cash account. Okay, more, if let's say you have more fund, doesn't mean that you can make more money, unless you are really great that you can spot like this stocks can actually move up 5 cents or 6 cents for in the next day. Then you can look into it. I basically I say myself, I can't do it. Okay, not every day I can do it, so that's why maintaining a low brokerage fee is very important. If let's say your fund size is small, so that when the price move up, you don't have to wait for the price move up a lot to get the profit. Because if let's say you are going for a limit account, then the brokerage fee will be more expensive. So you need the stock price to move up a lot. Let's say maybe about 5 cents in order for you to make the profit. So the majority of it is actually you are paying to the brokerage fees. So I don't recommend you guys to go for a limit account, especially when you have smaller funds. So also it helps you to control your yourself. Okay, so you won't lose more into the market. All right, and of course, I think today I'll just share up until here. And of course, for those of you who have any questions or you wish to talk about any topics you want me to cover the next week in my live stream next time, you can leave a comment under this video. So we'll look into it and we try our best to do it for you guys and discuss about it. Okay, and if let's say you want to know more about our operator analysis training course, our next intake is an 8-month training course, the pro members, so that you can actually achieve about the same returns and be a versatile traders, knowing when to apply day trading, when to apply short-term trading, when to apply mid-term swing. Then you can look into our next intake, which is on August. So next week we'll be starting on Saturday and Sunday. So you can always PM us in our Facebook page or email it to us and ask about more details. All right, so it's a monthly subscription base, so you don't have to worry too much that it will be a high commitment. All right, so yep, I think that's it here for today. Thank you very much for joining in, and remember to give us a like if you like our sharing over here, and subscribe to our YouTube channel and like our Facebook page, and remember to share this out to all of your friends. I'll see you again next time. Bye bye.
Wrong and Search, True Traders